Hello, today we are solving October 2023 Unit 2 question number 5 Part E. Okay, Part E says that at a board meeting on 1st July 2023, the marketing director said, I can see the figure calculated for the gearing ratio at the start of the year. Is this a good figure? How can we improve the gearing ratio? Now the director is asking this question. Evaluate the gearing ratio at the start of the year, making suggestion as to how it could be improved. Okay, this is what is the question. So we know that the gearing ratio we had calculated in the part B of the question. Gearing ratio is nothing but the fixed cost capital over the capital employed into 100. So this is usually looked by the shareholders on the directors to understand the how the company is performing. So we saw that the gearing ratio we had calculated at around 40%. A gearing ratio of 50 and above is high, and the gearing ratio of below 50 is considered as low. So we can say that, okay, we can see what will be the argument you are going to say, okay, in favor of the gearing ratio. So Yau Tong PLC's gearing ratio at the start of the year is not above 50%, so which is regarded as a benchmark. Above 50% only it will be regarded as a high gearing ratio, okay, and which is considered as risky. If it is high, it is considered risky because that means they have too much of liability. It indicates they have too much of liability compared to the capital employed. So, and they will have to make large interest payments, okay, payments from the company. So they will have less amount can be borrowed. So lenders will not be ready to pay to a company who have high gearing ratio, but they also are risk takers if it is above 50%. Now the argument against presenting gearing ratio are, although it is not 50%, it is a very low gearing ratio, and you can say that, okay, it is quite a little high, okay, it is little high because it has not reached 50%, but 40% is still high. There will be capital repayments as we had calculated in the part B. There was interest repayments around 380,000 pounds that needs to be paid every year. So the annual interest rate payments will be high. That is what we will argue against, however. So in the thing is, here you will say the current gearing ratio is low, so which is not considered, which is not risky. So therefore and they will have low interest payments, okay, the lenders will not be ready to lend money if it is above 50% of gearing ratio. Only if it is below 50% they can easily borrow money, but still we can see that they have high interest payments. Then how will you improve the gearing ratio? So you will have to either make profit, huge profit, or you will have to reduce the loan, or you can issue your capital employed by issuing rights issue. So because all others you have done here, you have done ordinary issue, redeemable preference, share premium issues, all this you have done. So you can suggest, so either they will have to make huge profits, which is going to help them to repay some bank loan, and or you will reduce the loans, you will pay off some loans from the retained earnings, or you will issue rights issue so that the gearing ratio will come down further from 40%. However, the issue of bonus shares, they have done an issue of bonus shares, means this will not improve the gearing ratio as the general reserve reduces. Okay, the general reserves is going to get reduced. They have issued a bonus share, we have seen in the part D question. Here they had issued, instead of a rights issue, they have issued a bonus. Okay, rights issue would have not affected the general reserves, but here general reserves will reduce. So if the general reserves reduce, capital employed will reduce, which means the gearing ratio will go up. So you will finally comment the issue of bonus shares by Yau Tong PLC. It will not improve, or it might increase as the general reserve ratio reduces, which is a part of, okay, general reserve ratio was a part of capital employed. Okay, it reduces which was a part of It was a part of capital employed. So in that equation, the gearing ratio might go